Blackrock, Vanguard, Fidelity, State Street, Morgan Stanley, JP Morgan, Goldman Sachs. These are the biggest asset managers in the world. Every year they put out these forecasts, but hardly no one's checking if they ended up being right about all that stuff. Can you trust them? Well, let's find out, shall we? Good day to y'all. Money Jim here, your money pal. You'd think the biggest investment companies in the world would get it right, wouldn't you? Well, I gone back and looked at all them outlooks they wrote for 2024. And now we know what actually happened. I can tell you the good, the bad, and the plain downright wrong. Now, I'm gonna point no fingers. There'll be no who said what. Their lawyers prefer it that way, if you get what I'm saying. You'll still get a picture, though, about whether these giant investment companies are any good at knowing what's coming next. So, looking at their 2024 outlooks, which, don't forget, they wrote at the end of 2023, the overall view was that bonds would be where it's at in 2024, while you should have been careful with stocks. A bright spot and compelling was how some of them described bonds, while one even had inflation-linked bonds as one of their strongest views. Or in other words, their top pick. It was a very different picture with their stock market predictions, though. Caution was the word used by lots of them, along with forecasts of limited upside, meaning they didn't reckon stocks would go up much at all. So, how did stocks and bonds actually do in 2024? Did bonds do well and stocks not so much? Nope. The Bloomberg Global Aggregate Index, which tracks most of the world's bonds, actually lost money in 2024, while the MSCI All Country World Index, which tracks most of the world's stocks, went up 18.5%. Got it really wrong there, fellas. But let's give them a chance, huh? Because not all bonds and stocks are the same. The investment companies like some types of stocks and some types of bonds more than others. Now, remember when I said one of them companies had inflation-linked bonds as their top pick? Well, they made some return at least, but not even 1%. So that didn't work out too good, did it? Plenty of them said high-quality bonds, the ones folks think are less risky, would be where the best returns would be. But it was actually the low-quality, high-yield bonds which did best, with the Bloomberg Global High Yield Index up over 9%. So that weren't right neither. So maybe they did better with their stock predictions. Let's take a look. As I said, none of them were too keen on stocks in general, which they'll be kicking themselves for. But where they did get it right was with US stocks, and in particular, high-quality ones. That's ones with strong, stable earnings and not a lot of debt. See, most of them thought US stocks would do better than ones in other countries. And for the second year running, they sure did. The S&P 500 went up over 23% in 2024. And because US stocks make up so darn much of the global stock market, if you strip them out, the rest of the world's stocks only went up not even 3%. And if you stripped out only the high-quality US stocks, everything else actually went down nearly 3%. Before you think that's touchdown for the investment companies, someone took a guess at what the S&P 500 price would be at the end of 2024. One said 4,200. Another said 4,700. But they were miles wide of the mark, because it ended 2024 at 5,881. This 23% return was a darn sight higher than any of them expected. One of the company's base case estimate was just a 3% gain. So, what did the investment companies say about the rest of the world's stocks? Well, none were too keen on Europe or emerging market stocks, which was the right call. The MSCI Europe Index fell about 1% in 2024, while the MSCI Emerging Markets Index did better, but still only managed about 5%. Plenty thought Japanese stocks would do well, though. One company even said Japan was its strongest equity view, or, in other words, its top pick for stocks. But with a return of about 7%, the Nikkei 225, that's Japan's most popular stock market index, fell way behind the US. So that guess weren't no good neither. But it ain't all about stocks and bonds in investing. There's commodities like oil and gold. Now, not all the investment companies made forecasts about commodities, but those that did had different ideas. One said it had a significant underweight to commodities for 2024, meaning they didn't like them much at all. And they thought gold was overvalued, while another thought commodities would do better than stocks and bonds in 2024. Well, the Bloomberg Commodity Index went up just over 5%, so more than most bonds, but a long way off stocks. None of the companies predicted a gold price higher than $2,175. Well, at the end of the year, gold stood at $2,624, which meant it had a mighty fine year in 2024 with a nearly 27% gain. That was more than the S&P 500. So thinking it was overvalued meant you missed out, sunshine. But what about crypto? I know plenty of y'all will want to know what they thought would happen with Bitcoin and the like. Well, truth is, they didn't say jack. Not one of them big investment companies made any predictions about cryptocurrencies. I guess it's too unpredictable, even for them. I doubt many of them would have reckoned on a 120% gain in Bitcoin in 2024. So there you have it, Sonny. How do you think those investment companies did? I know what I think, and it ain't pretty, no siree. It's not like they got it all wrong. US stocks did better than the rest, but it was way more than they were predicting. And if you'd done what they said and been cautious on stocks and convinced about bonds, well now, you would have missed out on a whole lot of returns. See, here's the thing about them forecasts. They're just guesses at best. And it ain't just them. No one really has no clue what's coming. World's full of too many surprises. Always has been and always will be. So here's what to do about predictions and forecasts. Stop guessing. Admit you don't know for sure and realize no one else does neither. Don't worry about what people are saying is going to happen. Don't even worry about what actually happens, even if it's a bad year for investments. If you made smart investment choices and made them for the long run, just let them run. Don't pay too much attention to them forecasts. You hear?